everybody. Thanks for tuning in to another episode of the Real Podcast. I'm your host, David Moya, and today it's very special. Once again, we have Megan Schenck of Three Lagoons Realty as a co-host. Thanks for being on, Megan. And Ronnie King, as a special host, or guest, I should say, with us here today. Hey, Ronnie, thanks for being on the show.
Thank you, guys. How you doing today?
Fantastic. So, Ronnie, we've met several times, actually through several mutual friends, I should say. And so I'm excited to hear a little bit about your expertise. Megan, obviously, she knows you. She's worked with you. She speaks highly of you. Let the viewers or the people who are listening, the listeners, let them know a little bit about you if you could. So just give me a little bit about yourself.
Yeah, of course. Well, thank you guys again for having me. So, I'm Ronnie King. I live right here in Carlsbad, California. I moved here from Arizona about 10 years ago, originally from Colorado. And I've got a wife at home, best friend, and a little 2-year-old son. And she's actually, we're expecting right now. She's about 6 months pregnant. So have a lot going on and love living out here in California.
Nice. And professional life, what's that look like for you?
Yeah. So, real estate has always been my passion. I had a mentor growing up who just bought and sold, and I was so intrigued. At probably about 13 years old, I met him and just fell in love with it. Didn't quite know which direction to go. So I've been in the business now about 6 years. I started in the real estate side and quickly learned that I'm a numbers guy and I love the mortgage process. So I've been doing mortgages for just about 5 years. I've been with the same team the entire time. And just enjoy helping families and helping them achieve the American dream.
Nice. Wonderful. And so how long have you been working in San Diego then?
So I've been here in San Diego working real estate for 6 years now. Okay. And like I said, mortgages specific 5.
Okay.
Nice. Very cool. And so fellow Carlsbad resident, so that's cool. We're out here. You have a team that you manage, right? So you're the sales manager for your team?
That's correct. Yeah. So we've got a team of 6 of us. We've got our branch manager, who is Kathy Brentlinger. She's been in the business about 30 years and just a wealth of knowledge for us. As I started, I really wanted to try to become a carbon cut copy of her. So, I became her assistant and just really worked through files and learned the process and how it works. From there, we've grown and we've got an in-house processor who does all of our internal stuff and back-end work. We have an office assistant and then 2 loan officers that also do similar to what I do. One specializes in VA loans. He's military, served about 10 years, and just an awesome guy. And then the other started as an assistant and has worked his way up to loan officer.
Nice. Sounds like, well, I know you guys have an incredible team in place because I have worked with all of you. Well, tell us, what makes you different?
I think the biggest thing that a lot of times in this industry is just the transparency piece. We like to take the holistic approach. We try to meet with our clients face to face and just really explain the numbers. Unfortunately, there's just a lot of ways to show quotes and show numbers and you can, kind of hide different fees and things like that. So we like to just take, again, transparent, here's what they are, and then we can kind of dissect and fit towards each person's specific financial goal.
Nice. And I see your team there. I got your website up.
Yeah, there we are.
It's like a good looking bunch. What you guys you've been around specifically, you've been around in the industry for a while. What makes you passionate? I know a lot of times people get a little worn down. It's very, very time intensive. What makes you passionate about what you do?
I think first and foremost for me is just being grounded at home. So for me, it's all about my why, right? Like why, what keeps you driven? And I think in an industry like this, you have to have something like that. So my why, right? That's my big passion, my family, taking care of family, things like that. Next is honestly, it's helping people. There's nothing better than calling somebody and giving them the clear to close. And, we're moving in this weekend, you get your keys. It's just it's an awesome feeling.
Very nice. And so what do you attribute your success and your team's success to?
A lot of it is, our referral partners. We're part of the chamber. which shout out to them. They're amazing. Local partners that we work with. And a lot of it is just being consistent, having daily routines, and showing up. You got to do it on the days that you don't want to. And I think that's the hardest part.
Sure. Yeah. And then obviously when you're working in mortgage, you're dealing with cycles, you're dealing with ups and downs, not just on the transaction side, because it is a very important and emotional transaction, but on the rate side, and so that's really what we wanted you to come into this episode and really give us some good information regarding rates. So rates, where are they right now, and how are they impacting the market?
Right. Pretty interesting. I pulled a couple stats this morning just so I could kind of be prepared. And right now, current refis were up about 152% year over year. So what that means is interest rates are about 7/8 down year over year. So, last year, if you were, let's say, at a 4.5, you're coming closer to the 3.5 range is about what we're seeing loans at right now. We've seen a pretty significant drop. Today is also, it's a pretty important day today. There's 6 Fed members that are speaking, and we're expecting another cut for September. So in the retail, like what that looks like to the consumer is it's about another 1/8 of a point is what they're projecting in overall interest rates. So it's going to be an interesting time coming up. We do expect, I'd imagine rates on projections are going to probably stay this way till, maybe the start to middle of next year. And then we should start to see some sort of increase.
Now, just for somebody who hasn't been following the rates, what were the rates like pre, this kind of dropping down, right? The rates have been dropping down, and if they're going to stay this way, what's the market look like moving forward? So I'll just backtrack a little bit. My first question is, where were the rates before the drop, and in terms of how was that affecting the marketplace? And then now where the rates are at current time, current day, how is that, even if it's a business?
Right. It's pretty interesting. This time last year, we were roughly at, I'd say, about 4.875 is where I saw most loans coming in at. There's a lot of different factors, credit score, loan to value ratio, things like that. But just as a general example, about 4.875. And in today's market, like I said, we're closer to the 3.5, maybe 3.75 range. So we've almost seen a full point swing. And in a lot of consumers' eyes, let's say you have a loan amount of roughly $500,000, right? You could be saving upwards of $250, $300 a month with a refinance in today's market. In projecting coming what's going to happen, truthfully, I think that we're going to continue to see that dip until the start of next year. And that's when they're saying, Feds are going to talk again, and we'll probably start to see that increase in rates.
Why are they so low? Is it because, the economy, the stock market, what's going on?
Right. It's pretty interesting. There's 3 main things that I really watch on a daily basis. The first is mortgage bonds, right? That's going to kind of dictate what's happening with the rates. The next is the stock market, right? And interesting, most times if the stock market is doing well, mortgage bonds typically are going to struggle a little bit more, right?
Yeah.
And then the next one is the 10-year treasury. So what's interesting about the 10-year treasury is we're almost going to hit the lowest point that it's ever been at. So in that, what that means is it's just going to continue to drive down interest rates. So pretty interesting stuff, what's happening. And I think a lot of it has to do with just stimulating the economy, getting business flowing. And we're seeing that in, real estate now. The refinances are up. Even purchases this time last year were up 7%. So we're seeing an increase in that, which is great.
Yeah, and how long do you think that they're going to stay this low?
I would imagine, like I said, I think by the middle of next year, we're gonna start to see an increase.
Yeah.
But based on projections, we're seeing, all the way up until that point. If I just had the magic 8 ball, it's always the toughest question to answer. But I think, as of right now, for the next few months, I don't see any reason that it's going to continue to go up. If not, it's just going to come down.
And now has the interest rate impacted different price points differently?
Interesting enough, it does, right? If you're a borrower and let's say you last year you could purchase a home for 500,000 and that was your top, right? You couldn't go above that. It could
Hmm.
bring you upwards. How I like to explain it is every $10,000 is roughly $60 a month in payment, right?
Hmm.
So you figure if we could save $300, right? I mean, we're maybe talking a $40,000 increase in purchase price just based on interest rates. So,
Got it.
as an example, if you could have bought for 500,000 this time of the year you might be able to buy it for 550, 540, somewhere around there.
Got it. And if someone, is kind of needs to be educated a little bit more on the terminology and the whole process,
Right.
what's like a summary of what's going on that you can give us regarding rates?
So I think, I love to practice what I preach first off, right? So I just recently bought a home. I think that anytime you're in the market, if you can afford to buy, I think you buy, right? It's a lot of people are very concerned with interest rates, although they are super, super important. The average American sticks into a single loan for about 7 years, right? So the first 5 years, you're paying about 60% interest. So it's not so important, right? So if you're renting and you're thinking about buying, buy. If you can do
Hmm.
it, do it. If you plan on being here, stay here and lock down a house. That would be my suggestion.
Got
Yeah.
it. And I know Megan has a pretty, it's a different experience with interest rates than I do. So, Megan, as an agent, what kind of questions are you getting from clients during this time?
Well, I think it's good because it's helping people get off the fence. If you're, spending X amount of dollars on rent, this is the perfect opportunity to speak to a lender, speak to Ronnie and learn how much could I qualify for? How much different is it from my rent versus what I could buy? And then of course you get the tax benefits and home ownership and equity. And so it's really kind of just starting to get people thinking kind of, hey, could we do this for first time home buyers or current, if you're renting, it might make sense just to talk and kind of creating conversation, which is great. Because people didn't really think, like you said, I only thought I could, afford 500, but actually after speaking with you and the current rates, I didn't know how much more I could afford. So, even me revisiting some of my current clients that are looking just to revisit that and say, hey, with a recent rate drop, maybe we can up your budget a little bit more if we're not finding what you're looking for. So it's really creating a lot of conversation right now.
Absolutely.
That's great.
And Ronnie, you're doing more refis as well to help people save money every month?
You know what? I am, yeah. So we love to focus on purchase, right? We love helping home buyers and purchase that American dream. But obviously, yes, we love refinances. And right now, our current, we're up quite a bit on refis, just because of the market, right? So what we do
Hmm.
is we promise our clients before, during, and after. And that's a big obligation, because it's one thing to do it before, it's one thing to do it during while you close the loan. But to follow up a year, 2 years later and present these mortgage options and say, hey, I can save you $200-300, that's the good stuff, and that's when we come back and
Right.
can change these guys' lives. So, that's what we've been focusing on over the last probably 60 days is just touching base with every client that we've worked with and just at least showing them their options. And, maybe even at this point, you look at different ways that you can invest in real estate, right? Maybe you own something now and now it's time to move up. So it's just a great time
Uh-oh.
to just talk with them.
Did we lose them?
No, he's here.
Oh,
Okay.
I can see you guys.
You there, David?
I'm here. I can't hear Ronnie for some reason.
Okay.
Oh,
You keep going.
cool. Yep, that's it. I can. Anything else? Can you hear me, Megan?
Yeah, I can hear perfect.
Okay.
And so what are your typical clients? Who are you guys? I know you've got past history of clients and probably a wide variety, but who are you guys typically helping right now?
Right. So, it's a mix, but I would say about 60% of our business is first time home buyers. So people that are just brand new, they're renting, and honestly, most of them are shocked with what the payment is and what they can actually qualify for. Just recently, Megan and I actually helped out a group of friends, and they're awesome, awesome people. And their mortgage payment is maybe $150 more than what the rent would be at that place. and they own it. So it's pretty awesome to just see that come to life.
Yeah, and I do want to point out too, they were ecstatic, and I know you had sat down you had sat down and explained everything to them, and that was a compliment to you and your team, is just how much information and how comfortable you made them in answering all their questions, and the knowledge behind the whole entire process was really high, spoken of highly, and definitely appreciated because with loans, not everybody, if you're not in this industry, it could be overwhelming and really be scary, because you're obviously taking the biggest loan that you press, biggest financial debt that you've ever had before. So walking people through, especially the first time home buyers, walking through step by step and explaining everything and the cost and different, the whole process is really beneficial. So I want to point out, hats off to you guys, because you did a great job and always do.
Well, thank you. We appreciate that. It's so important to know those details. And, when I first got started in the business, it's almost mind-boggling, because you can borrow $500,000 and you won't know the exact amount you need until probably day 3 of closing, right? So it's scary as the borrower. So we like to just pad those fees. We like to show them the worst case scenario. And that way, as it comes down to the wire, most cases things get better for the client, and it just puts them at ease.
Yeah, well, that's wonderful. Well, so for now, where can viewers go to find out more information about you and your team?
Yes, well, thank you. So you can go right to our website, trualliedteam.com. You can find us on pretty much every social media platform, Instagram, Facebook at trualliedteam.com. We have a website, it's through Social Survey, which is where all of our reviews go from past clients. And then obviously the Carlsbad Chamber. So we're up on their website and all of our information is there.
Nice. Well, I want to thank you. I know David and I both want to send our sincerest gratitude to you for sharing kind of what's going on in the market as far as loans and interest rates, sharing your knowledge with us, and telling us more about your team and all the people involved in your business. So we really appreciate it.
Yeah, well, thank you guys both for having me on. I really appreciate you guys.
Okay, you have a good one. Thanks so much.
Thanks, Ronnie, so much for being on the show.
Thanks, David. Have a great day.
Thanks.
All right. Bye-bye, guys.